The Philippines has emerged as Southeast Asia's fastest-growing economy, surpassing Vietnam and Malaysia. This significant shift has captured the attention of economists and global investors alike, as the Philippines officially outpaced Thailand in gross national income (NI) as of 2024. According to the latest figures released by the World Bank, the Philippines now ranks as the second wealthiest nation in Southeast Asia in terms of accumulated national income, second only to Indonesia, with a remarkable GNI totaling $518.1 billion. This positions the Philippines ahead of its regional neighbor Thailand, which recorded $510.2 billion. The updated rankings show Vietnam in fourth place with $453.5 billion, followed closely by Singapore, $451.2 billion, and Malaysia, $414.9 billion. Indonesia continues to lead the pack with a massive GNI of $1.39 trillion. Understanding the Philippines' economic climb, GNI versus GDP. A key question arises. What is fueling this climb for the Philippines, and why does its GNI stand noticeably higher than its GDP? This pattern sets it apart from every other major economy in the ASEAN 6, the 6 biggest Southeast Asian economies. GDP versus GNI. What's the difference? To understand this phenomenon, it helps to distinguish between gross domestic product, GDP, and gross national income, GNI. GDP measures the total value of goods and services produced within a country's borders over a set period, essentially providing a snapshot of local production. NI, on the other hand, takes this a step further. It starts with GDP and then adds the income that residents and businesses earn abroad, while subtracting the income earned by foreigners working inside the country. Therefore, GNI reflects not just what a country produces, but what its people earn anywhere in the world. In 2024, the Philippines' GNI was $56.5 billion higher than its GDP. This significant gap is unique among the ASEAN 6 and tells a powerful story about the country's connection to the global economy. The driving force: overseas Filipino workers and remittances. One of the biggest drivers of this GNI boost is the millions of Filipinos working overseas. In 2024, overseas Filipino workers, OFWs, sent home an astonishing $38.3 billion in remittances, representing a 3% increase from the $37.2 billion sent the previous year. These remittances now constitute 8.3% of the Philippines' GDP and 7.4% of its GNI. These are not small numbers, they are a lifeline for individual households and for the national economy. Furthermore, the majority of these remittances, approximately $34.5 billion, were channeled through formal banking systems. This indicates not only a growth in volume but also increasing financial inclusion and efficiency in the transfer of funds. These trends point to a broader reality: the Philippines is becoming increasingly global in its income base. While the country is still growing in terms of domestic production, the wealth earned by its people working abroad is playing an outsized role in its national prosperity. Unlike Thailand, Vietnam, or even Singapore, the Philippines relies heavily on its human capital, not just at home but all over the world. From healthcare workers in the US to seafarers in Europe, and engineers and professionals in the Middle East, Filipinos are generating income that flows back into their homeland, lifting families, boosting the national economy, and even shaping government policy. This growing gap between GDP and GNI may signal that the Philippines is tapping into a more resilient and diversified economic model, one where income does not rely solely on local output but on the global engagement of its people. Future prospects and challenges. If these trends continue, the Philippines could become an even stronger economic player in the region. While the remittance-based income model has its challenges, as it is tied to global job markets and foreign economies, it also brings unique opportunities. By continuing to invest in education, overseas labor rights, digital remittance channels, and economic reforms, the Philippines may not just keep its spot ahead of Thailand, it might one day challenge Indonesia for the top position. One thing is clear: the story of the Filipino economy is no longer just written at home, it is being shaped around the world. Remittances. more than just numbers. When discussing the billions of dollars flowing back into the Philippines every year, the story is not just about numbers, it is about people, families, and the global connections that keep the economy humming. The bulk of these life-changing remittances come from a handful of key countries: the United States, Singapore, and Saudi Arabia, with the US standing out as the biggest source of cash sent home by OFWs. Zooming out to the global stage, the Philippines holds an impressive position as the fourth largest remittance-receiving country in the world in 2024. According to the World Bank, the country received an estimated $40 billion in remittances, trailing only behind economic giants like India, $129 billion, Mexico, $68 billion, and China, $48 billion. Just behind the Philippines sits Pakistan with $33 billion. This global ranking is more than just a number. It is a powerful reminder of how vital Filipino workers abroad are to both their families and the nation's economic health. The steady inflow of remittances does not just put food on the table. It fuels everything from household spending to business investments and helps keep the Philippine economy stable. What's driving the growth? Several factors have contributed to the increase in remittances. The continued economic recovery in key regions where OFWs work, such as the United States, the Middle East, and across the Asia-Pacific, means better job opportunities and rising wages. More employment and better pay naturally translate into more money sent back home. Interestingly, the weak Philippine peso against the US dollar has at times actually boosted the value of remittances. That said, this delicate balance can be shaken. Any major geopolitical tensions or economic slowdowns in host countries could jeopardize job security for OFWs and, by extension, the flow of remittances. Looking ahead to 2025, experts expect remittances to continue growing but at a modest pace, assuming the global economy remains steady. These steady inflows will keep household consumption strong, which is crucial because the Philippine economy relies heavily on consumer spending to drive growth. The Philippines, a service-driven economy. In fact, the Philippines is often described as a country where services, not manufactured goods, are the engine of economic progress. More than half of the country's economy is powered by the service sector, which has overtaken agriculture and industry combined. As of early 2025, the breakdown is telling. The service sector accounts for a whopping 62.2% of the GDP. Industry follows with 29.5%, while agriculture, forestry, and fishing make up just 8.3%. Among the most important service industries are the IT and business process outsourcing (ITBPO) sector alongside the contributions of millions of OFWs working abroad. Together, these sectors account for nearly 1/5, or about 20%, of the Philippines' total GDP. This massive chunk highlights how much the country depends on people-powered service exports rather than physical goods. The story of remittances is not just about money flowing across borders. It is a story about how a nation leverages its most valuable resource, its people, to carve out a unique place in the global economy. The millions of Filipinos working abroad do not just send dollars home, they send hope, security, and opportunity back to families, fueling a cycle of growth that touches everything from everyday life to national development. While challenges remain, especially with global uncertainties on the horizon, the resilience and adaptability of Filipino workers continue to be a powerful force, anchoring the Philippine economy and helping it navigate the complexities of a fast-changing world. Booming ITBPO and global diaspora. In 2025, the Philippines hit a major milestone in its booming IT and business process outsourcing industry. According to the IT and Business Process Association of the Philippines, this sector now employs 2 million people, generating a staggering $40 billion in revenue. That means the country controls 10% of the global IT and business process outsourcing market, a huge slice of this multi-trillion-dollar international industry. But the story of the Philippines' economic rise does not stop there. Another powerful engine driving the nation's growth is the incredible flow of personal remittances, money sent back home by Filipinos working abroad. The World Bank projects that remittances to the Philippines will reach $40 billion in 2025, making the country one of the world's top recipients. These funds come from an estimated 11 million Filipinos scattered across the globe who live and work far from home. The Filipino diaspora is not just large, it is one of the most widespread in the world, with over 10% of the country's population living overseas. Philippine communities thrive in many countries, but the largest populations are found in the United States, Canada, Saudi Arabia, the United Arab Emirates, and Japan. These overseas workers, professionals, and families are the backbone of a massive ongoing transfer of wealth that supports millions back home. With these two dynamic forces, the rapidly expanding ITBPO sector and the ever-growing remittances from abroad, the Philippines is positioned for a promising economic future. Experts predict significant strides in economic development over the next decade, powered by a global workforce that connects the country to the world and a thriving service sector that is creating jobs and driving innovation at home. The Philippines is not just keeping pace, it is becoming a leading player on the international stage, leveraging its unique strengths to build a more prosperous tomorrow. A transformative decade ahead. Looking ahead over the next decade and beyond, the Philippines is on track for a remarkable transformation. Thanks to a rapidly rising per capita GDP and steadily improving standards of living, millions of Filipinos can expect better access to education, healthcare, and overall quality of life. This progress will help dramatically reduce the number of people living in extreme poverty, a milestone that would reshape the nation's social and economic landscape. What is fueling this optimism? It is a powerful combination of sustained cash inflows from Filipinos working abroad, a booming IT and business process outsourcing (ITBPO) sector, and the steady revival of the tourism industry after years of global disruption. Together, these forces are setting the stage for long-term inclusive economic growth. Beyond these familiar engines of growth, the Philippines stands to benefit from multi-billion-dollar investments from the United States, a key partner eager to deepen ties in critical industries. For instance, Philippine companies with concessions in the South China Sea's exclusive economic zone are actively searching for American partners to explore oil and gas resources in this strategic area. This joint venture could unlock new energy supplies and bolster the country's energy security. Meanwhile, Washington remains committed to expanding its footprint in the Philippines' semiconductor and ITBPO sectors, two industries already showing explosive growth. A particularly exciting prospect is the proposed collaboration with Seattle-based Ultra-Safe Nuclear Corporation, which aims to develop small modular nuclear power plants in the Philippines, a move that could revolutionize the country's energy landscape and provide a clean, reliable power source. The Philippines' ascent on the global economic stage. With a strong reform agenda, resilient economic growth despite global challenges, and deepening international partnerships, the Philippines is poised to become one of Asia's leading investment hubs. According to the latest World Economic League table by the London Centre for Economics and Business Research, the Philippines is projected to rank as the 23rd largest economy in the world by 2039. Among Southeast Asian nations, only 3 are expected to break into the top 30 largest economies by then, and the Philippines is firmly on that list. The future is bright, but it is not without hurdles. Global economic uncertainties, geopolitical tensions, and the need for ongoing domestic reforms will require vigilance and innovation. Still, the Philippines' unique blend of a youthful workforce, strategic location, growing service sectors, and new energy initiatives gives it a solid foundation to thrive in the decades to come. In short, the Philippines is not just growing, it is gearing up to play a much bigger role on the world economic stage, attracting investment, creating jobs, and improving lives for millions of its people. When you look at Southeast Asia's economic landscape, 3 countries are making headlines for their impressive growth and rising global ranks. Indonesia holds the 10th spot worldwide, the Philippines stands at 23rd, and Vietnam ranks 25th among 189 economies. What is truly remarkable is the Philippines' steady climb despite global economic headwinds. According to a recent report analyzing nearly 200 economies, the Philippines' rise signals more than just growth. It reflects a growing resilience and increasing competitiveness in crucial sectors. This momentum is fueled by strong domestic consumption, a steady flow of remittances from Filipinos working abroad, and a rapidly expanding labor force eager to drive the country forward. The projection is nothing short of impressive. The Philippines is set to jump 10 places over the next 15 years, climbing from 33rd in 2024 to 23rd by 2039. This leap means the country will overtake regional heavyweights like Thailand and Singapore, securing its spot as the second largest economy in Southeast Asia, right behind Indonesia. By 2033, the Philippines' economy is projected to hit the $1 trillion mark in nominal GDP. According to S&P Global Market Intelligence, this milestone will firmly position the Philippines not just as a major player in the Asia-Pacific region, but also as one of the world's leading emerging markets. Over the last 2 decades, the average annual GDP per person in the Philippines has skyrocketed from less than $1,000 per capita in 2000 to around $3,500 by 2022. Experts forecast this figure will surpass $6,000 per person by 2030, reflecting a rising middle class with more purchasing power than ever before. What is driving this growth? The key engine powering this rapid economic expansion is private consumption, the spending habits of millions of urban households whose incomes are growing steadily. As cities expand and more Filipinos move into higher-paying jobs, their spending drives demand for goods, services, housing, and entertainment, creating a positive feedback loop that fuels further growth. With this kind of trajectory, the Philippines is not just growing, it is transforming. Its rise up the global economic ranks, expanding middle class, and burgeoning urban markets all point to a nation ready to take its place among the world's economic leaders. Whether you are an investor, a business owner, or simply someone interested in the shifting tides of the global economy, the story of the Philippines is one to watch, a vibrant, fast-growing economy full of opportunity and promise. The road to a $1 trillion economy and beyond. Looking ahead to 2033, the Philippines is on track to join an exclusive club of Asia-Pacific economies, boasting a nominal GDP of $1 trillion or more alongside giants like China, Japan, India, South Korea, Australia, Taiwan, and Indonesia. The Philippines is set to become one of the region's economic heavyweights. But this is not just about numbers, it is a sign of how far the country has come and where it is headed. Fast forward to 2050, and experts at London-based Capital Economics forecast the Philippines could rise to become the 18th largest economy in the world. That is a massive leap, reflecting decades of steady growth, an expanding middle class, and a workforce driving innovation and productivity. The projection is a staggering $4.86 trillion in nominal GDP, with GDP per person hitting around $33,650, a dramatic rise from where the country stands today. But this bright future hinges on one critical factor. The Philippines must overcome its current infrastructure challenges to unlock its full economic potential. With a solid plan of reforms in place and growth momentum undeterred by global headwinds, the Philippines is primed to become a leading investment hub in Asia. Over the next 5 to 10 years, the country is targeting $100 billion in new investments, particularly from economic powerhouses like the United States and Japan. These investments are set to pour into diverse sectors, from energy and semiconductors to infrastructure and the digital economy, fueling the country's next phase of rapid development. Japan has long been one of the Philippines' most trusted development partners. Its commitment is visible in massive infrastructure projects like the Metro Manila Subway and the North-South Commuter Railway, two game-changing transit initiatives with a combined price tag exceeding $25 billion. Impressively, Japan is financing more than 80% of these projects, signaling deep confidence in the Philippines' future. Meanwhile, the United States continues to deepen its investment footprint, particularly in the semiconductor industry and the ever-expanding IT and business process outsourcing (ITBPO) sector. These industries have been critical engines of growth, creating jobs and boosting exports year after year. Amid rising political tensions in the South China Sea, especially around the contested West Philippine Sea, the Philippines is uniquely positioned to attract increased investment from U.S. and Japanese firms looking to diversify away from China. This geopolitical backdrop could accelerate Manila's rise as a preferred investment destination, strengthening ties with key allies and securing long-term economic gains. In short, the Philippines is no longer just an emerging market, it is becoming a global contender. With a youthful population, strategic location, and growing international partnerships, the country is set to transform into an economic powerhouse that will reshape not just Southeast Asia but the broader Asia-Pacific region. If the Philippines can navigate its infrastructure gaps and capitalize on these opportunities, the next 30 years could see it soar to heights few predicted, becoming a beacon of growth, innovation, and opportunity in the global economy.